On today's Positively Sloped, a big week of economic data is on tap. We discuss international markets continuing to lead domestic markets and how long that will last if it does. We wrap up the Super Bowl and we look ahead to the college basketball and golf seasons. Okay, let's talk shop. Today is Tuesday, February 10th, and Scott, we have a Super Bowl winner, which means the sports calendar is flipping, just like I think some investors would like some economic data to flip to some positive trends, if you will, as we're on tap for a big week of data this week, starting tomorrow or today as you're listening to this, Wednesday, February 11th. What do we have in store for us?
A lot of great stuff, Jake. We've got a non-farm payrolls report coming out in the middle of the week. Middle of the week, a Wednesday. I have a hump day non-farm payrolls report coming out. This will be Wednesday, February 11th, coming out for the January period, and then obviously having the revisions prior to. And then big kind of, let's say, inflation week too, with CPI coming out, which are both influential points for the Federal Reserve to basically make their next decision on interest rates, which we've talked about many times. We'll go into today. But those are the key data points, jobs and inflation as they relate to what the Fed's going to do, and as it relates to really the economy overall.
So dual mandate, as you said, employment and inflation. Let's start on the employment side. First of all, overarching, still in a partial government shutdown. So we have delayed data again.
No wonder things are going so well.
I know, yeah, right. I know your opinion. The listeners know your opinion is that they already know what the numbers are. They don't need to be collecting data, so they have an idea. But what effect do you really think that the shutdown has on data collection? We're, like you said, middle of the week, hump day, second week of February, we're getting a January number. That's got to have some effect on the data that we're collecting, no?
It does. Well, here's what I think it does. It has effect on the data that's reported.
Hey,
See, they know, guys.
All righty.
You guys know it. We all know it. It has some effect on the data, but we go, hey, it doesn't matter because the market, I think, already has it baked in, Jake. And I think that's the other thing that we talk about a lot is the Federal Reserve being the key component here. I have very, very little doubt. The Fed knows the real numbers. The Fed knows the data. The Fed knows the numbers if they've been changed, if they've been altered. The Fed knows the real data, and they know the core kind of information. So to me, the market may react some. And if we remember back in the old shutdown, the shutdown part one, which was back in November, which seems like eons ago. Yeah, which was a long time ago, and the markets did okay during that period. Remember, that data was completely skewed, completely messed up, completely goofy and erroneous, and the market kind of took it like, I'll have a beer, have a glass of wine, and move on. And so I think there's that whole issue of now that we have the data that's been compiled in between the two shutdowns, now the market's kind of, I guess, extrapolated that into what we're going to have on these numbers, and therefore it kind of comes slow and steady. It kind of comes like a little bump in the night when it comes to data like tomorrow, where we have the non-farm payrolls report, because the market, I think, kind of looks past it to some degree.
Yeah, for sure. And the report coming out tomorrow, I think we're expected to have okay job growth in that number, but I think what the market is really going to look to digest is the revisions over the last 12 months. I mean, the early indicators are we could have 1 million plus jobs revised down over the last 12 months to further show, as we've been talking about the whole time we've ran this show, that the labor market has been weakening. So that's going to be a number that could provide some sticker shock. I think, like you said, and like most of this generally goes with the markets, it's pretty baked in. I think we're expecting a negative revision, which means that the market would have to see something over the top to really react negatively to it. But I mean, the JOLTS number that came out last week big number, lowest job opening since COVID. Wow. So what does that tell you about the labor market?
It's goofy. The labor market is weak now. There's a lot of so JOLTS is a funny thing. It's an acronym: Jobs Opening Labor Turnover Survey.
Yeah.
And it basically tries to figure out how many jobs are opening out there that people could take. They're open for offer for be taken. The problem is it doesn't always take in, as we've talked about, these kind of contractual jobs, or these jobs that are kind of like these Uber drivers. These guys are doing some of these one-off things, deliveries, whatnot, and it has an ability to kind of keep the numbers kind of, I think, on a rational basis when we're used to seeing in the numbers over the course of the last decades. But the problem is, as we've seen, and I like the way you put it, the numbers are the numbers, but the market itself, knowing that jobs are still increasing to most degrees, folks are still working. The economy is still clinking along because we've got consumer spending still doing well. You've got hotels booked. Flights are very expensive. Airports are crowded.
Flights are very expensive.
Extremely expensive. I know that from you going to Australia all the time.
Right.
It's like there's got to be something else going on out there that's economically both sensitive and economically both revealing when it comes to where these numbers are. And so when the overall numbers come in and they're the quote-unquote official numbers, I think the market these days is seeing the numbers not really being as the official number, but maybe being a suggestion. The second thing I will tell you about the non-farm payrolls report, look at the labor market wage growth too, because that's the way to kind of judge if this inflation number is going to be correct correct or hot or cold on Friday. And then look at the U6 number. The U4 number is the unemployment number, so you get a number, 4, 5, 6%. The U6 number is actually those that are marginally attached to the workforce. So that actually number is going to be a little bit higher because those are just not ones that are just unemployed, but ones that are basically not going to be employed too. So that number is going to be a little higher too. And that's the number I think to look at. But here's another thing to think about. Something else to look at, Jake, I think is think about Kevin Hassett. Well, exactly. There it is. Think about Kevin Hassett too. Yeah. Speaking of that, his comments yesterday were talking about expectations about job growth going forward and being lower because of tighter borders and mass deportations. I thought that was a goofy comment. What do you think?
Can we call a spade a spade?
A club, yeah.
I mean, a club too. I mean, this administration is obsessed with talking about what Biden did or didn't do, the same way that Trump one was obsessed with talking about Obama. Of course, we're going to have lower job numbers. That's also a product of the policy that they've put into place. And so it's really just posturing. It's really just trying to get this kind of idea in everybody's head that the job market is weak, but don't look over here, look over here, right? It was strong when Biden was here because we had people coming in across the border. I think he said willy-nilly. I mean, it was something to that effect. And now we've tightened the border, obviously, and we're deporting people and there's labor shortages. And so yes, of course it's a product. Of course you're going to have better labor numbers when you have other non-citizens working and taking those jobs that U.S. citizens in the workforce don't want to take.
Labor supply,
but right. It's just saying this is why this is happening, even though yes and no. Like it's just posturing by the administration.
It is, and it's a bigger labor supply, and that's their issue with that U6 number that I mentioned. The labor supply is effectively who is out there to be taken from the labor market and be put into a job. As we know, when you mentioned about the immigrants, they came here wanting to work, a lot of them. And we got rid of some of those folks, unfortunately or fortunately, whatever, however you want to look at it. And so that labor market has now been shrunk. And the labor market now is back to maybe folks that weren't taking those jobs before. So that's why that U6 number is important to look at to see really who's out there to possibly take those jobs and probably won't. And then if you look at this too, the non-farm payrolls report, let's call it the NFP, it's like the non-farm payrolls numbers are like showing more weak job numbers than like you mentioned over last year versus like the last couple of years. And that's shown up, Jake, in currencies. So the US dollar is a reflection of basically, economic growth, inflation, and also kind of the strong labor market that is or isn't out there. And of course, inflation policy or interest rate policy by the Federal Reserve, our central bank, versus other central banks in the world. And so if you look at the negative impact that the employment numbers, let's say, and Fed policy has had on the US dollar, I mean, we're down 10%. Year over year, the USD, man, the greenback, the stuff that you have somewhere in your wallet. If you have one, I lost my wallet, and I don't really miss it because
something's not surprising about that.
Yeah, I'm surprised too, or not surprised, not surprised, because the greenback's almost not even worth the paper it's printed on anymore because we destroyed the heck out of it by interest rate policy and pumping money into the economy and then saying, "Oh, the economy's so great, it's so great. Now the economy's weak. We've got to do this and this and this."
Yeah, it's funny or not funny to see this domino effect where you could start with economic data. It's chicken egg, right? Start with the economic data if you want. You could start with the USD if you want, but it's just filtering into the markets, which I think is what people that are listening to this pod care about the most, right? Are there retirement accounts, their investments? And 2025 was particularly a strong year for international markets. We covered that. One of those reasons being because the USD was declining so hard, and people were taking their investments otherwise. They were taking their toys and going home, or they were going to their friend's house across the ocean. And so, you had that kind of divestment of U.S. Equities into the international markets. And part of that is because of the declining USD and the beaten down USD, which Trump wanted, at least in Trump 1.0, he wanted a weaker dollar. And so now we're starting to see the effects of that in the markets as international markets have carried over that performance from last year into this year. But I want to put a bow on the economic stuff first. What do you think it would take for a March rate cut?
I hope a miracle, to be honest with you. It's got to be something that's got to be a negative. It's going to be a negative non-farm payrolls report.
For you, it'd be Armageddon, not a miracle.
It would be Armageddon. I mean, you would need something really bad. You'd have a negative non-farm payrolls report, in my opinion, and I hope you need some CPI number that's below 3. And I don't think you're going to get the CPI number below 3. You could get a negative non-farm payrolls report just because of the goofiness in the data, and we talk about the shutdown impacts. But then, I mean, a cut, the next cut the Fed makes better be on the back of some really, really bad economic data. Because remember, GDP growth, as predicted by the Atlanta Fed, as predicted by even our group, as predicted by folks that are out there that actually know a thing or two, GDP growth in 2026, sports fans, is going to be close to, if not above 4%, man. Who cuts interest rates in a 4% growing economy with consumer spending still hanging in there and prospects of job growth returning if we get past this AI stuff, get past the slowdown, get past this immigration stuff? And good point about taking the toys and going home earlier. I wish I had friends overseas. It sounds like you got a lot of them. That's pretty cool. I think that there's also the issue, too, with the S&P 500 about why it's getting boosted so much in the light of the U.S. dollar decline. Remember, most companies, or these days, S&P companies have about 60% or so of their earnings overseas.
Yep.
They sell that stuff overseas. They repatriate to the U.S. dollar. They're getting another boost when they bring back to the dollar because they're getting foreign currency that gets another 10% boost, quote unquote, when it comes back to the USD because they convert it and they get a little booster there. That also helps with S&P earnings. And so I think that's something that is something to keep in mind. If they keep smashing rates down, that could help the S&P still.
Yeah, and 25, I like the point about the 26 GDP because 25 was a surprise positive year to most people. I mean, since I've known you, we're going on 8 years now. I haven't heard you ever say that we're going to be in a recession or we're going to have declining GDP
Sometime.
or even slowing
One of these
GDP.
days.
But 25, you bet you banged your head on, or well, probably,
you
but
can tell,
banged your fist on the table again to say we are going to have a 3 to 3.5% GDP year. Looks by all intents and purposes that we're going to be 3.5%, 4% for the next year. So on international stocks, 25 international markets were pretty much the story. They were the headline. Some people said that it's obviously the dollar declining, it's valuations just catching up. You could point to a number of different factors for why international markets finally had their day in the sun. I, for one, will put my hand up and say I thought it was going to be a day in the sun. I don't think like the end of the calendar year matters for a market cycle, but they have not gone away in 26. I mean, so far you have major overseas indices leading our indices again.
Already,
I mean,
yes.
we talked last week about the rotation within domestic stocks. You have the Dow leading all three indices so far this year, still midway through February, but the Japanese Nikkei is beating the S&P 500. You've got the Chinese Shanghai index that's right there with the S&P 500, and so the MSCI ACWI ex-US is beating the S&P. So are we in? Forget we're in intra domestic, internationally. Is money flowing out of the U.S.?
It is, and I think there's a chase going on. I think some of the U.S. money that we're seeing depart is related to political standpoints as well. I think there's some concerns, too, that there's going to be maybe, and now the funny part about that I think that it's going to be funny is this is going to be a chase now. So a lot of folks are going to chase that money. They're going to chase those returns, and I still believe that the best house in the market, the best house in the neighborhood is still the U.S. market and the S&P 500, as it were. So as you see folks get out of, say, those neighborhoods and they go chase international, I think there's still a lot of risk there. I think there's political risk, there's geopolitical risk for certain, there's legislative risk, there's central bank risk.
It's fundamental risk with companies.
For sure. And you got trade risk too. And so I think as we start to kind of maybe ameliorate some of the issues that we've had here with trade risk, we've got the big, beautiful bill fully intact now. So that's going to keep buoying and bolstering some of the companies that are over here still doing a lot of business. And like I said, companies are still going to do business overseas. You mentioned the Dow being the leader of the pack here. The reason too, if you look at the Dow stocks, look at the Dow 30, you've got a massive amount of internationally exposed companies in there, okay? Sports fans. So you have a reason to believe why those companies are doing so well because the currency is backing them up. And so I think that will continue. It's just, let's face it, if you look at the history of currency, you look at the US dollar versus every other currency in the world that's ever existed effectively, you've got the US dollar in one of its biggest, fastest drawdowns that's ever had since there's been major, major issues in, say, the global environment, of which there's really not yet. So I think this is overblown to some degree, not to say it's not going to go down more, but it's going to level out here at some point, and that should take away some of the tailwind.
And I'll give you a data point to back up your point about people just chasing performance is, we talk a lot about ETFs versus mutual funds, the different investment vehicles. You and I are obviously pro ETF for all of the great benefits that they provide as the next evolution of an investment vehicle. We've talked about ETF flows in general, overtaking mutual funds in terms of inflows. This year so far, so January was the number. ETFs took in $156 billion in inflows, the biggest January it's ever had, which this is like one of those numbers where like every month is going to be the biggest. Of that 156, though, 51 billion went into international ETFs. Wow. So the majority of ETF flows went into international ETFs, and that is, to some extent, it's got to be chasing. To some extent, it's rebalance. To some extent, I think, actually, I'll just piggyback on the chase, is like you get portfolio managers that don't have a defined process, that don't have this stuff codified, and they saw that they lost out in 25 to internationals, and they're like, well, now I got to get in because people are asking. And so far it's worked, but we know that strategy doesn't pay off. We know you have to have time-tested ideas, and I think this will be, it's cyclical, and you don't put a timeline on a cycle necessarily. It's not 1 year, it's not 15 months, it's not 18 months. It's probably more like 2 or 3 years. but I don't think you're going to have this just full blown international outperformance over the next 3 years. Do you?
No, and I think it's not going to be worth the risk too. I mean, I think there's not this sea change of all of a sudden the international markets are suddenly the replacement for the S&P, right? Or for the Nasdaq, for example, or the Russell. I do think that's funny though, because when you start to feel this chase being on, that tends to be when the music is likely to stop at some point.
You love being a contrarian.
I do, and here's another contrarian thing. I would love to enjoy international markets. I mean, Jake, you and I have talked about taking so many international trips together. We haven't done a single one yet,
right?
But we're looking for.
We can't
some
leave
money,
the group chat.
Some donations for that. We'll try to get one available. I mean, going to like.
Aren't you on a no-fly list?
Yeah, well, no, we can swim.
Okay,
we can take a boat over. Miami. You said Miami would be like international travel.
Right.
Maybe the point is that like international markets, especially when it comes to emerging markets, which is where a lot of folks like to chase the cookies, they go up once in a while, but over time they're not. Positively sloped. And that's what's weird is you look at the risk versus the reward that international markets provide you as an investor. It's just not worth the risk, in my opinion, at least from the data that we have so far going back in history. Things could change going forward. Obviously, we have a different kind of micro, maybe geopolitical environment here going forward, potentially. But I'm not one to put my chips on that bet yet, in the sense of I think international can be a good allocation for some investors, for some of your portfolios. But you've got to keep in mind that U.S. is still the most, let's say, fundamentally based way to kind of, I think, invest your dollars going forward here.
Yeah, I mean, as long as I've been in the industry, which is as long as I've known you, so again, let's quote 8 years or so, we've had this just regime of U.S. excellence. And you invest in U.S. companies because they're the best and they're the fastest growing, they're the most innovative, and all of those reasons why they're leaders. I got to challenge you a little bit on the positively sloped, though, because we have the ACWI ex-US, which is just a representation of the global market besides U.S. companies, that has almost caught the S&P 500 on a 3-year number. So you're looking at 65 versus 70%. Much of that is made up in the last year because the ex-US is up like 35% and the S&P's up like 18 or so, because we're basically flat since the start of the year, up like 2%. So it isn't just, I mean, obviously I just said a lot of that is made up of the last year, but there's been a little bit of a flow, and if you will, a little bit of a wave towards international equities. And I do think you could have some outperformance over the next year or 2 years.
Sure.
Again, I'm still, we talk on the show trading versus investing. And from an investment standpoint, I think your best bet is on domestic markets. But if I were a trader, yes, I'd already be a year late, but I think there's probably some merit to sticking into international markets or diving in a little bit right now, because I think there's some alpha that you can generate.
There's some alpha there. I think there's also a beta though too. And I think you're right. 3 years looks fine. Even the 5-year number is not horrible.
Delta?
Gamma, delta, zeta.
Wow.
I think there's going to be a reason though if you look at longer periods of time, like you mentioned, for long-term investors, a lot of the folks that we do a lot of work with, see, there they are. They're showing up right here. Look out. Somebody just swung and missed on that one.
Oh, they're watching.
It's looking at how
speed skating.
And we're just speed skating into this one because,
nice.
Here's the thing. I would not speed skate into international investments right now, but I would tell you, if you have a longer time horizon and you have the ability to buy into international markets along the way too when it gets bumpy. I mean, you mentioned the alpha is going to be there. The beta is going to be there too as a measure of, say, volatility. So know that, yes, there's going to be some good slope to them, but over the course of time, you go back beyond these 3 and 5 years, you go to 10, you go to 15, you go to 20, you go to 30, keep naming numbers, you're going to see that those risks of those investments overseas are not worth it.
Yeah, I'd like to see the 209 options act, 209 p.m. options, or it's not 209, it's 1040.
Almost.
The 1045 options activity at the close today, because they're all just watching speed skating right now, as you probably heard a couple of reactions.
No
Whoa. Speaking of sports, so the Olympics are on. That's great. The Olympics makes a pretty grave mistake, in my opinion. Why do they start before the Super Bowl?
I thought that was really weird. The weekend of, and everybody's getting geared up for the Super Bowl. We're promised to have this amazing Super Bowl. We talked about NFL all year. We nailed the NFL all year. And it was an awesome year in NFL.
Nailed.
You guys did great. Roger Goodell and company. I got to give them credit. And then they just blow it on the Super Bowl, which kind of stunk because that would have been an awesome kind of creme de la creme to everything. But it was still a good game, I guess, in the sense you like the Seahawks.
Right.
But I agree with you. They started really, really kind of inconspicuously on that Friday evening. They have games on Saturday. And I don't know if they did anything Sunday, but then now they're back during the week, and everybody's kind of like ho-hum. It's winter games, so it's not exactly the biggest deal.
Right.
And then the biggest thing for me was watching Lindsey Vonn, too, unfortunately, have that terrible accident, and then probably being, I hope, not done with her career, because she's an amazing athlete, amazing representation of the U.S. and what they represent. But more so, it's like, man, left over now is, like you said, now we've got to kind of get caught up to the Olympics, and they bring great stuff.
We've already got a couple golds. I mean, yeah. Ellen?
Yeah, it was awesome.
I mean,
I can almost see myself out there. But also, you're right.
You are a
the
beautiful
viewership has
skater.
been so far. But I think that start point, and like you mentioned, some of the marketing of it too as well, has been pretty lackluster.
Yeah, I think in terms of viewership, in terms of the Super Bowl, I mean, we got to start with the man, the myth, the legend, the guy that you let go,
Kenneth Walker,
Sam Darnold.
Oh, let go. I thought it was you, Sam Darnold. Yeah, former Vikings.
No, I ran
quarterback.
away. You didn't let me go.
Former number 2 pick, I think, by the Jets, journeyman
Number
quarterback,
4 or 5
that nobody could be. He wanted 4 or 5 plus $40 million.
2 was Josh Rosen.
Josh,
now an investment
from USC,
banker.
Yeah, now investment banker buying and selling stocks.
Yes.
Or companies. Sam Darnold wanted $40 million from the Vikings as a contract offer after
Super Bowl
last year's
champion.
After last year's performance. Who he did very well, but then he stunk it up at the end of the season, which I thought he would do actually in the game against the Patriots. And congratulations to Sam. He's a good man. I think he was on a team, Jake, that fit him very, very well.
Agreed. Very complimentary.
And a team in the Seattle Seahawks that was underrated most of the year. In fact, even by us. We didn't talk about the Seahawks too much.
We talked
about the
Rams.
We talked about the Eagles somewhat. We talked about the Niners. Talked about the Bears because of you.
Because they're the best.
Which would have been amazing if I would love to seen this. Well, the Bears play the Seahawks this year, I think.
No, we don't have the West.
No. So they had a nice setup for him, and they had a nice setup because of the fact that the defense was good enough to where Sam didn't have to do a ton of things, and he had good receivers. He had Cooper Kupp and your boy
JSN.
JSN. And it's like there was enough going on there that I think Sam had the weapons, and he didn't have a lot of the pressure, and he had great line. And congratulations to him, and congratulations to the Seahawks that showed up, kind of like the S&P. I think is going to show up this year and really blast through everybody.
And the Seahawks are running back JSN next year. Those early adopters of the slope will recall that joke, but
yes.
Probably not Kenny Walker. I mean, he made himself some money in that game. My takeaway was, and this is so self-serving, obviously, but I don't care about Mike Vrabel and Drake May. I want Ben Johnson and Caleb Williams. They looked terrible.
Awful.
The entire playoffs. I just saw a stat that in their playoff possessions, they averaged 1.13 points per possession. The 0-16 Browns from a handful of years ago averaged 1.22 points per possession. I mean, they were outmatched all playoffs. Drake May put the ball on the ground so much that offensive line looked like it wasn't even there.
2 rookies on the left side, I think it was.
The left side was dominated, ran through.
He
ran through 2 rookies, but Will Campbell was like the 5th overall pick.
Yeah, he was. He was good, but still, you had 2 guys that are rookies on there. They're just get blasted and run over. Drake May, once he got back there and he felt some pressure, he used to be able to run out of the pocket, it seemed like, too. During the playoffs, it looked like he would sit in there a little bit longer.
Yeah, no,
he was lackluster with the ball. Guys weren't getting open. I mean, the other thing, too, is the Patriots didn't have anybody that he was really throwing to. Other maybe Stephon Diggs, a week off, a week on. And the running back stuff got really weird for the Patriots. Trayvon Henderson started the year really well, and then he just
went to Ramondre
they gave
for sure.
an average like 5 carries a game towards the end of the season, and then the playoffs he wasn't carrying the mail that much either. It's just a very, very odd game plan. Hunter Henry never showed up, so I agree with you. The Vrabel kind of plan seemed very, very strange. And even on the game,
he was too conservative.
Way conservative, dude.
You got to go for it at some point.
That's right, and he was pulling the guys off on the field in the third quarter. 4th and 2, showing he had no confidence, and they were down, by 13 points or 14 at that point, maybe 15, 16 on whatever. It's like they were not there in that game. They never there. Their headspace wasn't there, and so I agree with you. I think it was a pretty big dud. I would have loved to have seen Bo Nix and the Broncos, your boys back in the day.
Yeah.
Bo Nix and the Broncos show up against the Seahawks and Darnold, because that would have been a fun matchup, and then we get this stinker instead.
What'd you think of Collinsworth in the booth? I thought he was savage. I thought he was like Aikman-esque.
Yeah, but everybody's on Chris here, and I actually like Chris. I like Chris Collinsworth. In fact, I grew up in Cincinnati area, and he's I think he was number 80 on the Bengals growing up, and he was great. Sison and Collinsworth and Kenny Anderson, and it was like, I think Collinsworth does a good job, and I think it's one of those things where it seems like the media, social media, gets on him about stuff, and maybe he wavers a bit, tries to be somebody that he's usually typically not in the booth because people didn't like how he was. There's tons of bad acting out there and tons of bad announcing out there. I don't think Collinsworth is one of the biggest problems.
I like him.
Tom Brady's getting a lot of flack too. Not only the fact that he can't announce games, he also can't run a team in the Raiders. So it's just kind of like there's a lot of things out there that everybody seems to attack. I don't know who they like. They like Mike Tirico,
right.
like Al Michaels. I mean, I think it's tough to be there. Bring back John Madden. Bring back Dan Fouts. Bring back Dennis Miller, who was on
R.I.P.
Monday Night Football for a while.
Let's get to the halftime show before we move on.
Yeah.
I assume this conversation could get us in all sorts of trouble, so we'll see what comes of it.
The FCC is already on us.
What were your thoughts on Babundi's halftime show?
I'm in a minute right here now. I didn't watch it.
Okay.
I was in the bathroom, And then I was also outside, just kind of talking. I just didn't feel like I wasn't impressed. I wasn't that compelled. Donald Trump, President Trump, wrote some really funny things.
Oh, you were watching Turning Point USA.
I wasn't actually. Although that was, I heard, a decent show.
No,
although
come
a weird
on.
show maybe,
Come
but
on.
decent. I didn't watch any of it. I can't do this, the halftime report since Dre and Snoop. That was kind of my last one. I mean, you
That
have
one
stuff
was
like
awesome.
Prince that was amazing back in the day. It's like there's enough stuff that I've seen in halftime shows that I thought were great. The thing that I think is the takeaway too about halftime shows or just shows in general. How about the commercials this year? They sucked.
There's a handful of good ones.
There's a handful of ones, but now it's like either healthcare,
Right.
It's drinking,
AI.
It's like AI, and then it's like hair pills and stuff, and all this crap that they think they're talking to me about. And
Yeah,
it's
I
like,
was
I'm
gonna
just, like,
say,
getting
why'd you
super,
touch your own
negative and
hair?
Nervous.
Right.
So there's just more fun entertainment stuff that was out there that were really fun back in the day, and now it seems like it's just taken over by, like you said, the AI and some of the corporate sponsorships that are just not using any imagination.
Yeah, a ton of AI out there. I think for the halftime show, for someone who did watch,
How are the ratings on that, by the way?
we don't know.
Decent?
We'll find
Yeah,
out today. I was open to it. My heart, my head were open to liking it. I do like Bad Bunny when I'm out, and it's kind of music, but I didn't really. The set was awesome. The production was awesome. Ton of celebrities. Very cool production. I don't need
Yeah.
to hear a 20-minute concert with no English, to be honest,
I
at the
guess.
Super Bowl. Like, it was hard for me. We all kind of just sat there and we're like, yeah, this is cool, but like I can't sing along. I can't so it was like, I don't
love
know.
it when
I
you
mean,
sing along. Here's the weird
right,
thing
I love
about
to
that comment
sing.
about
I do
people
love to
saying-
sing, dude.
Right. Well, here's the thing about people saying that they don't understand any music that he says or lyrics. It's like, well, guess what? Somebody does.
I know
Because
Spanish, and I don't understand
Well, the
it.
guy's selling records somewhere and he's getting downloads. So it's kind of
100%.
like funny how everybody's like, oh, I don't like this. I don't like that. He stinks. And I'm like, well, let's see. Let me check on the sales that
saying
he's
that.
got. And somehow on the downloads, and he's crushing it. And I mean, Donald Trump was like, I can't understand a word this guy says, and he's a loser probably. Or something.
Probably.
It's just kind of like, I just feel like something else is telling us. Other data is saying that he's actually pretty popular, doing pretty well. So kind of proud of him. And he's Puerto Rican, I think.
Yes,
He's,
for sure.
Came over and was singing. I think he's like 12 or 9 or so he's kind of a self-made guy. And I think there's also that point of the music industry in the United States, let alone, kind of globally, has these kind of factors in it where you get these guys that come out of nowhere and show up. And so it's kind of inspiring to see that. But, these guys rise and fall. He'll be the popular guy for a couple of years, and then there'll be somebody else that's going to create a bunch of stir and controversy, and look forward to that next time. And maybe that's the one I'll actually watch.
Yeah. So I said at the top of the show that the sports calendar was flipping. I mean, I'm now fully into college basketball. Speaking of risers and fallers, have you watched any college basketball in the last week? Do you agree that it's an awesome season so far and that there's a wide open tournament ahead of us?
Yes, wide open tournament. It's been a great season.
And who do you
Sports-
like?
Gosh, I don't know. I like Kansas actually this year.
I mean, they beat
Kansas
Arizona
is
last night.
awesome. Yeah, they did beat Zona. They played Zona pretty good. They played them pretty good. They were ahead most of the game. Houston looks amazing. Actually, Houston's always got a good program. They brought that on. There's just a lot of good teams. You're right, and I think also the funny part is basketball's the way these guys play these days. They're just a really well kind of congealed. These big teams, these big programs are really playing well together. Look at all the talent that these guys put out there. Whether it's the starting
there's
5
professional
or 8 guys,
players
they really
in
are.
college basketball.
But they're putting these guys together like they are in the NFL, or
Right.
like they were in the NCAA to the NFL, and so it's showing up in that kind of mantra. And I think that this year we're gonna have a similar run in the playoffs, or let's say the tournament, like we did with the playoffs in the NFL, where it's gonna be dog eat dog, and it's gonna be really fun to see these guys fight it out because you got the conference tournaments. And then you have the NCAA tournaments with folks fighting for their position. So, yes, I agree with you. I think the NCAA, I've not watched very much outside of like the top, say, 25 teams. Those are the teams I like to focus on.
Yeah.
But there's a lot of risers and falls in there that are going to be worth checking out come March.
Yeah, this is about as wide open as I can remember. I mean,
Who do you like?
So you got in the Big 12, you've got Arizona, Kansas,
Yeah.
Texas Tech, who are all Houston, who are all really good. The Big 10 is
Ten's really good.
asserting its dominance
Really good.
across sports right
Really
now.
good.
I mean, Michigan is
Michigan
going to be
State's good.
Michigan's going to be number one
They are.
now that Arizona
Michigan
lost.
State's good, too.
Illinois is up there. Michigan State just beat Illinois.
Yes.
Nebraska just lost to Michigan, but was
Right.
undefeated previously. So I think it's an awesome setup. The SEC is loaded as usual. Florida's really, really good again. Bama kind of sucks. I like Michigan. What Michigan has that from the games that I've watched is you've got experienced guards. So they brought over Elliot Cadeau from North Carolina, who's also really good. Just beat Duke.
Yep.
And then their big men, though, can shoot free throws.
Right.
So they've got their starting 2 big guys that shoot over 70% from the free throw line. In the tournament, you need to shoot free throws. And if your big guys can shoot, that's a huge advantage. So I think Michigan's the front runner right now. But I mean, Duke's got an amazing talent.
Yeah,
and
Duke's
Cameron
been ahead in
Boozer.
so many games, and they've just blown it. I mean, that game against North Carolina was really a head scratcher. Really fun.
They were up like 8 with a minute left.
Yeah, I know. And they
the double storm. The double storm.
Schreier's been kind of weird with some of those
Dude,
leads.
I got a word for him because of that.
I know he's not been
it's soft as hell for him to complain about that.
I don't think much to worry about, but I do think you're right. I think Big Ten actually probably is the conference. If you're looking at maybe something as far as a wager or something like which conference is going to win the tournament, I'd put on Big Ten, and they're time tested. I mean, you look at the battles that they have in the Big Ten. I mean, you get games still like 60-55, 65
hard-nosed basketball,
65-60. Yes, hard-nosed basketball. It's half-court basketball, and so that's where you can kind of win games. That's where that whole like defense wins championship things comes up. Where, oh my gosh, that was Seattle Seahawks a couple days ago.
Yeah. All right, so let's move on to fades or trades for the week. Just a few for this week because I wanted to call back on a couple of the short-term ones that we had from last week. Last week we brought up the S&P 500 earnings projection for Q4. Said 8.3% across the board was the estimate. That was kind of heavily loaded into the Mag 7 and the tech stocks. So we're through about 60% of earnings as of today. We've got a huge slew this week, another nice week next week, and then it kind of slows down from there.
For sure.
Right now we're at 8.8% revenue growth. I mean, again, we have had the Mag 7 or most of the Mag 7 go. So we've got some negative pull coming, but do you think we stay above that 8.3 projection?
I think we do. I think we stay at 8.8, if not go up towards 9. There's a couple of big boys left. NVIDIA's left. There could be some big ones.
NVIDIA wraps it up.
Yeah, and there's some big ones there. I mean, there's some ones that's where the big one comes in, I think, at the end. But you have a couple more chip guys. I think you're going to have 8.8 at least. I think we could go towards 9. Okay. I really do.
Other topic last week that we were short term on was whether Bitcoin would get to 100K by the end of Q1. I think it was at like 62 or 63K when we talked about it last week. It's back up to around 70,000. So, the point was, I faded the
was it 100,000? What were we talking about?
100,000.
Okay.
I faded the 100,000 by the end of Q1.
Lord.
But that last week was 10% in a week, dude. I think any revision to I think you traded it. I think you said Bitcoin could get there.
I'm still going to trade it.
I faded it. I think I'm going to trade it.
What do you have? You probably got to, and Bitcoin pretty much trades all the time, and that's the whole point of it.
No doubt.
It's like you got 45 days left roughly till the end of the quarter, let's say. And so it's like you've got 45 days is a lot for Bitcoin. I mean, I think there's going to be some short covering in there. There's going to be some folks that are going to run back in because they're going to sell some of the gold, sell the silver. Folks that are maybe going to see some boost in some of these earnings reports and say, okay, let's get out of maybe tech some more because it rallies. So I think Bitcoin's the big target here towards the end of the quarter. And I'm still going back towards. I'm going to still trade that because we've seen the volatility that can pop on the upside too if you get a little bit of interest there.
Yeah, I'm gonna come over to the dark side and from last week I'm gonna trade that. I did a little more research on kind of Bitcoin market cycles and the cycles back to like 2018 have been, it tends to go down at least 55% and bounce. That 55% was like 60,020, which is strong support. That's where it bounced last week and bounced up 10%. I think we could be at 100K by the end of Q1.
That's cool. I mean, the Bitcoin cycles are huge. I mean, you remember the Bitcoin cycle that was when it was $10 and fell to $5. That was 50% retracement back in like 2008 or something. Well, how about this? Let's do another fader trade here. How about a new one for this week?
Yeah.
Scotty Scheffler, who's like our biggest, kind of golf, I guess, like fan, we're fanboys. I like Scotty Scheffler. I like Bryson, those guys, Brooks and Brooke Koepka. But it's like, golf has a sneaky momentum out there nowadays.
I love golf.
Golf is killer, man. They're getting major attendance, major viewership.
Yep.
The guys are making tons of money.
Yep.
Live and all that stuff's died out. It's great.
Dead.
It's great. It crushed them. And so, dude, fader trade, Scotty Scheffler this year. Let's call it 2 or more majors this year, dude. Can he do it?
Yeah, I'm going to trade that Scotty wins 2+ majors. I mean, he
Masters
won
being the first one coming up, right?
In April. He won his first tournament this week at Waste Management Phoenix Open. He shot a 73 on the first day, so he's 2 over on the first day. It was his first over par round in like the last 15 tournaments, and then still ended up T3.
Yes, right.
He was 1 back of the lead before they went into the playoff, and obviously that's first and second. So he is by far head and shoulders the best player on tour right now. He's playing his best. He had a little hiccup and still managed to come in third at a scoring tournament. I think he probably wins AT&T Pebble this weekend. I'm going to take him to win 2+ majors. My guess would be that he gets Masters and the U.S. Open. I think that track plays well for him.
Yeah, I'll trade that as well. I think Masters definitely, and U.S. I mean, yeah, British is kind of a tough one. I mean, I'd love to see him take the British. U.S. Open's probably a good one, or I think PGA is a chance because you look at the course makeup against him. That's something that fits him well for his game. So I agree. I'll trade that as well, but say I think it won't be more. The thing I was putting together was 2+. He's not going to get the Grand Slam in 1 year, but I do think there's a chance
becomes the Scotty Slam.
Yeah, there could be a Scotty Slam because I think there's a chance 2+ beyond that. It could be 3 because the fact that if he does take that British. I think the PGA is definitely his.
All right. Scott Fader trade, MSCI ACWI. So again, ex-US, just non-domestic companies in the global market, outperforms the S&P 500 this year.
I think it outperforms most of the year. So I'm going to actually kind of have trade fade it. So I'm going to trade it. Yeah. So I'm going to say it outperforms for the first 6 months. The whole year I'm still going to stick with the S&P. Yeah.
I actually like that. I had a pretty similar take to that. I think we obviously, this is kind of a 2020 hindsight, but we're a month and a half into the year, and the MSCI ACWI ex-US is ahead. So you're not really making much proclamation by saying it's gonna lead for the first quarter or so. But I'm with you. I think it'll trade ahead for first half, maybe a little more than that, and then we'll get some domestic roar back, and I think we'll end up higher, and we'll kind of quiet down all these concerns.
I think we'll come back.
Big
beautiful bill kick in. I will trade the fact that MSCI will beat the S&P last year.
Yeah, okay, that's great. A good call.
So I bet Fader trade. Let's do a random ticker roll.
Yeah, let's do it.
So what do? I put my finger up and then
you just turn around and you pull a ticker from back there.
All right. Well, INTL looks like
Intel.
Intel Corporation. Wild run on Intel in the last, say, year and a half or so. Government involvement. Yep. Obviously, some of the chip business has popped up. Kind of rough earnings though this last quarter, and some questionable outlook, some questionable spend. Costs they're going to have going forward. Demand, of course. The fact that chip sector is getting super competitive, and every day there's somebody conjecturing or posturing about, I'm going to use these chips and not those.
Right.
So I think with regards to Intel, I'd watch out because Intel. If we still have the quote up there. It's
where'd it go?
Yeah, 30. So it's been bouncing all over the place. I mean, this stock was, in the teens last year for most of the year. And so I think there's a rally in there that's already kind of baked in. But the fact too that we do have this chip sector that's going to, I think, get some footing, get some going to get some level playing field on it. That will be a buy eventually, but I would say I would fade that thing right now because it's too expensive.
I'm going to trade it. I mean, I agree with you in the sense that we were in the teens. We got that government investment into it, and then we bounced extremely. I think it was the first one. Mm-hmm. Then we bounced really hard. It was before AMAT, Applied Materials. So we got that bounce from the government stake. I'm going to take it as like a too big to fail sort of thing, right? We've been talking for the last few episodes about winners and losers in AI. On what planet is a loser going to be the Donald Trump and U.S. government-backed tech company? So I'm going to say that is enough to prop up Intel, and I would trade it in the short term and the long term.
It could keep them alive, and it also, kind of, I guess, begs the question: does Intel then become its own? Does it still say its own company? Does the government influence them a lot going forward to where all of a sudden, like Intel's had a lot?
What's it got? They have 10%.
Yeah, and it's like Intel has a lot of executive turnover in the last several years for good reason because they haven't figured it out. I mean, they were the
Trump becomes president.
So he comes president 2029, there, he steps over,
and
then he takes over there, and then that stock goes to like 80. But I think for the meantime, there is that questionable kind of situation with regards to Intel, the playing field, and the fact too they did get their boost already. Like I said, they already were in the 20s, and then teens, 20s, and now 30s. So there's a reason to believe that a lot of that's baked in, and so they need to take the next step. And I don't think they will ahead of, like, say, some of these other guys that are in there.
All right, fair take. That's the show for today, everybody. Thank you very much, and we'll be with you again next week.
See you around.